Hello, everybody, and welcome to my update of the most undervalued growth stocks spreadsheet. So I'm probably going to be updating that spreadsheet every Friday night because both videos that I've released about the spreadsheet were the most popular in my channel. So I figure I'm going to keep going. These numbers as of this evening, so they should be ready on Monday and they should be valid on Monday morning if you're interested in valuation. So a few words of caution about the spreadsheet. This spreadsheet is called the most undervalued. That does not mean because a stock is undervalued or overvalued. That doesn't really tell us too much about very long-term performance. All it tells us is that right now, I believe you're paying less for growth in some stocks compared to others. And I've described in my previous videos how this spreadsheet is done, but in a nutshell, the goal of the spreadsheet is to calculate how much you're paying for each percentage points in revenue growth. So it is a variation of the PEG ratio of Peter Lynch. It's a variation in which I use enterprise value instead of market cap because I want to penalize stocks that have a lot of debt. And then I use gross profit instead of earnings because I only look at hyper growth stocks, i.e. my minimum threshold, at least when I enter the stock, is 30%. I want at least 30% of revenue growth. These stocks tend to generally only be optimized for gross profit, and thus it doesn't make sense to use earnings. So I do enterprise value over gross profit, right, over revenue growth, and that will tell me what's the cost per percentage point of revenue growth. And the way I value this, the way I look at valuation of stocks in this spreadsheet, there's different ways to do it, but in this spreadsheet I look what is the cheapest cost per 1% of revenue growth that I can pay in the market. And I rank stocks based on the price to gross profit to revenue growth. Price to gross profit to revenue growth. So let me go ahead. So what are the least expensive stocks right now as of this Friday, February 10th in the evening? So there's been a change. There's been a little change. It's not HIMS anymore. The cheapest stock now is StoneCo. So StoneCo is the cheapest stock right here, followed by HIMS, followed by Teladoc. Seems like healthcare stocks have crashed much more than the other stocks. So probably something to do with the reopening. PubMatic, which is an ad tech company. Fiverr, which Fiverr is a special situation. I just added Fiverr to this spreadsheet because I'm going to cover some platforms, and platforms are very unique business models. So Fiverr is a special situation. So I would wait for my full video on Fiverr if you're interested in that stock. Mercado Libre, SoFi, Airbnb. These are the top 8 cheap stocks. And then I put a special mention for Square and AMD because Square and AMD, so Square and AMD right here, are very, very much cheap and much cheaper than the rest. Important change in the spreadsheet this week is I added the average. So out of all of the stocks in the channel, you can compare how they differ both on forward revenue growth, on gross margin, on enterprise to gross profit, and on my favorite metric of valuation right here. So what is the cheapest stock in each of these categories? So the cheapest energy revolution stock right now is Enphase. And what's funny is 2 weeks ago, it was Tesla. So Enphase is now cheaper than Tesla as per this metric. Then in healthcare, in the 2 revolutionary healthcare stocks, looking at kind of turning healthcare and changing the way we do healthcare, HIMS is still the cheapest, but not by much. It's interesting to notice that Teladoc, you're really paying not much for that growth either. So HIMS is cheaper though. Then on data warehouses and data monitoring SaaS stocks, Palantir is still the cheapest by a long shot because SPACs, pipes, they've just crashed all of these stocks that were associated with a boom have been crashed. And so it makes very little sense, this valuation for Palantir, if we're honest, because, DDoc, Snowflake, MongoDB, that have not had this association are trading much higher. I could make a case objectively that Palantir has a lot going for it. It's a military contractor, and it's got a software which it may be successful at selling or not selling to enterprises, but there's still a huge margin of safety in Palantir. In my opinion, this stock is way too cheap. Then in cybersecurity, CrowdStrike. So CrowdStrike has been going down quite a bit, and it's still the least expensive cybersecurity stock right now, in my coverage, of course, not in all of them. In e-commerce, right, a lot of e-commerce platforms and websites are scaled. So I only look at Mercado Libre and Shop. And when you compare Mercado Libre and Shop, it's really Shopify. It's really a no-brainer. Mercado Libre is very inexpensive. Shopify is very expensive. I am slowly averaging out of the stock. I've sold a little bit of my position, and I'm selling it slowly. I think Shopify is very expensive right now. StoneCo is the cheapest payments company. It's cheaper than dLocal and Square. This stock has had a lot of stigma from Cathie Wood and Warren Buffett Association. Which I guess either way right now, neither are popular in the field of innovative investing. But the stock to me has very strong fundamentals. StoneCo focuses on being kind of the Square of Brazil, and they're doing very well. And I believe this is a heavily undervalued company that I'm buying right now. I'm pretty happy to be buying StoneCo at this level right now. One day the market will wake up to StoneCo. No investment advice, but that's kind of what I'm looking at here. Okay. Chip makers. So you have AMD and NVIDIA, slightly different focus, right? NVIDIA mostly GPUs, AMD much more diversified, but really an effective diversified maker of chips. They're kind of winning the CPU race right now. And AMD is way cheaper than NVIDIA. So I've been adding to AMD recently, but NVIDIA, I'm just letting it run. I'm just not touching it at these levels. Can't wait for it to go back down so I can add more, but NVIDIA, I'm just letting it run. Then we have AdTech. So we have Pubmatic and the Trade Desk. Pubmatic is 4 times cheaper per unit of growth compared to the Trade Desk. But interestingly enough, my position in the Trade Desk is about 5 times bigger than my position in Pubmatic, because Pubmatic is kind of a risky stock. It's kind of at the edge of the risk curve because it's much smaller, it's well known, you always have a risk that it gets acquired, that there's a bunch of issues, but nonetheless I think Pubmatic is a gem, and at this market cap it's easy for me to see the stock really double or triple from here. No investment advice, of course, but I will make a video on Pubmatic, and I like Pubmatic. Moving on, out of a Neobanks, which is the cheapest neobank, there's been a shift here again. Nubank used to be cheaper, but now SoFi is cheaper. So you're now paying less for the growth at SoFi than Nubank. But I own both stocks, and I think both companies are good. I have a bigger position in SoFi because I understand the US market much better than the Latin America market. I've never been to Latin America, so it's tough for me to judge. SoFi, though, I believe is a highly performing company with a lot of potential. And the last one in my spreadsheet here of the most undervalued growth stocks, right? This is only undervalued growth stock, is platforms. I've just added this. I've covered Airbnb on the channel a long time ago. I will cover it again. And Fiverr is another platform that comes to mind. In the future, I might add Etsy as well. Although Fiverr and Etsy have seen a big slowdown in their growth, so they're kind of under my cutoff. But Fiverr is heavily undervalued, I believe, compared to a lot of the stocks on this spreadsheet. Now, the platform has a lot of risks, especially with ChatGPT coming, and it's a very small position for me, Fiverr. I have a much bigger position in Airbnb as far as my platform investments go. But I think platforms are very interesting business models, and I hope to cover the platform business model soon a little more on the channel. And noteworthy is that Airbnb is also pretty cheap at this level. At a 0.25, Airbnb could have also been considered a good buy because it's pretty cheap. So again, none of this is investment advice. I hope you can pause the spreadsheet and see my calculations and see what you think. This spreadsheet is guaranteed to change a lot again next Friday because we have a lot of earnings coming up for a lot of these stocks over next week. So next Friday, I will be releasing a new spreadsheet, and I'm expecting changes in the ranking. If you like this video, if you want to see my next updates, I plan on doing updates like this every week. If you want to see all of my updates, please subscribe. This was not investment advice, just entertainment. Thanks for liking, for subscribing, and have a wonderful day.